Okay, good afternoon, everybody. It is March 18th, Friday. The market just closed about 10-15 minutes ago. This is your weekly take on the market. I'll be your host, no surprise. I am the manager. Oh, I guess my name is Scott St. Clair. I'm the manager of the premium product group here at IBD. Here's a disclaimer. I'm not licensed, can't give buy, sell, hold recommendations. None of us at IBD are licensed. So keep that in mind. Take a moment to read this. Okay, we'll talk about the markets. For the sake of brevity, I do have a meeting here in about a half hour, so I'm probably going to pass on the industry groups. It looks exactly the same, but I would review that this weekend. Go through there, see if there's anything that's really changed this week. It was a big week, so you might maybe there's something that I missed. You also can go through the additions list in the Growth 250, something that Harold Morris talked about on one of our webinars, and sort by group. So that's pretty good. If I have time, I'll show you that. But it's the additions list in MarketSmith, and you can see what are some new groups. Maybe I'll try to do that. So let's and then we'll have our some stocks, lots of stocks. I had a boatload of stocks I thought we could talk about. So we'll try to keep that within reason. And then the quote of the week. So let's go to the markets. Here is a chart of the NASDAQ. The volume won't be up to date, but the price action should be fairly close. It looks like we ran right up into the 50-day. And, this probably will serve as some type of resistance, which will be good. It'll be nice if we can get just some kind of quietness for a number of days. You had 4 really strong days. I think one of my friends texted me. I think it hadn't happened in since 1950 something. 52 years ago, last time you had 1% 4 consecutive days on the NASDAQ. So everything is unprecedented nowadays. The volatility is tremendous both ways. You really have to build that into your model, and we'll talk about that. Let's go to the S&P. I know we had follow through day 1. So what, day 15 follow through day here this day? Whether you believe in the follow through day or not, it doesn't matter. The concept is, it is what it is. That's a follow through day. Now, how do you want to tackle it? Well, that's up to you. Some of you are probably already invested if you're in energy and resource stocks. Maybe you could add some more exposure if you think there's a chance we get another leg up. I'm open to any possibilities. I really don't know. This is the one thing about shorting is this. If this is a bear market rally, this is right in that area where you want to be shorting. But when you want to be, when the time to be shorting is nobody wants to be short, right? Does anybody want to be short here? It's funny how that works. So when you're making lows, that's when you need to cover your shorts. You can't be shorting in the hole, is what somebody on Twitter calls it. I'm sure that's been said before, but you really don't want to be shorting weakness. And I've talked about this before. Shorting weakness is no bueno, okay? You're going to get run over. So you need to be very strategic with your shorting. If you're going to do that, you need to short into strength, and that can be pretty tough. So like I put on a short today right near the close because prices just kept going higher all day long, but I wanted to have something short to offset my longs a little bit. And, I fully expect to be down on it on Monday, the way the market's going. That's okay. If hopefully the other stuff I have long is up and overwhelms that. So, I think the thing is, I don't know. I really don't know. I can see both ways. We've had a nasty bear market. I don't think the index really justifies the type of weakness bear market that we've had. It's been really bad. Like Shopify is down 61%. That's after a massive rally this week. PayPal is down 62% after a massive rally. What else? I could go on and on. How about some really big top service now? Really big tech down 18%. Microsoft down 15%, probably down 20 at the lows. Tesla, everybody's favorite, is down 27%, but I think at the lows it's probably down 40%. So you've really had a bear market in growth, and the reason the indexes, I guess, if you want a reason, are holding up is because energy is, I don't know if Devon is in the S&P 500, honestly, but it's a proxy for that. I think Exxon is the biggest holding in the ETF, the energy ETF, and it's gone, from 40 to 80. So it's doubled in the last, 6 months. While I mean, I would, if I were to change the ARC versus Exxon, in the last time period here, it would just be astronomical, the RS line. So you really had a bunch of dead cat bounces in the market. So, I don't know what that means as far as whether we're out of the woods. Is the market, going to trend higher? I really would prefer for the volatility to slow down. I might make less when I'm right on the upside, but I can manage my risk a little better on the downside. When stocks are up 30, 40% on a day, it's just hard to justify where you're going to, put your stop on something like that. I don't know how you can manage your risk when they're moving around so much. And we'll talk about those stocks. So the indexes seem fine. The reason the follow through day was on the S&P and not the NASDAQ, just in case nobody knows, is the NASDAQ had undercut. So this was a do-over. You start over here, day 1, day 2, day 3, day 4. If the volume is up today, the NASDAQ was up 2%. This would be, a follow through day if the volume is higher than previous day. And with option expiration on Friday, it's likely it could have been. Now, that won't affect what IBD does on the big picture because they've already gone into, confirmed uptrend. All right, so this is a screenshot from Wikipedia, I believe, of the Dow Jones, because I wanted to go back as further than like the S&P and NASDAQ have. But if you look at this chart and just eyeball the dates, these are the biggest single days in Dow Jones history. And you can see that it's littered with 29, 31, 33, because bear market rallies are when you get the biggest single days. So really big single days in the indexes is not bullish historically. It's not good action, which is why I want the markets to calm down. China, we'll pull up Chinese stocks in next slides, but some of them were up 50% in a day. Like, what changed for that stock? I think BEKE, which is a real estate stock, was up 50% in a single day, right? Did their business change 50% better in a single day? Of course not, right? Maybe their business changed 10%. I think the Chinese government maybe was considering property taxes, is what I saw. They don't have property taxes, and they decided they're not going to go with that law. I don't know. I'm not in BEK. I don't know. I didn't look at it that seriously, but that would be bullish for their business. That would change their business to the tune of 50%. I would say no. So big rallies are historically, you can see there's some 2020s littered in here with COVID, right? April 6th, March 13th, and some 2008s, right? Great financial crisis. So these are all terrible volatility times in downtrends where you get these really large moves. So the US indexes weren't up astronomically. They kind of stacked great gains on top of each other each day, but the move in Chinese stocks was just historic like this. All right, let's skip the industry groups. Let's go to stocks to watch. Let's pull up BEKE. So you can see that it looks like a blip, right? Wow. I was like, half a minute, I was like, did I pull up the right chart? I couldn't see the 50% move. So it was up 64% that day, right? And that's because it was down so bad. Look at this weekly chart, So even after being up 64%, it's still down to 79%. BABA, big move off the low, still down 55%, and Pinduoduo still down 72% with this huge move off the lows. The index that I watch or used to until it just kind of got so bad, KWAB, which is text, down 64%, and it was up 29% for the week. So this drove, right or wrong, it drove the strength in the US markets as well, right? Because there's some delisting fears in some of these companies, and then the Chinese government came out and said they'll support these. They're not going to let them go away, so to speak. So you had a really big rally in those. As far as US big tech, Tesla, so 4 days in a row, right at the 50-day. So interesting. I really felt like Tesla has held up the best of all of them, maybe Tesla and NVIDIA. So, it didn't make a low when the NASDAQ did. Here's NVIDIA. It didn't make a low when the NASDAQ did, but look how much further above the 50-day it is. So there's some strength there. What else? Let's look at Apple. Oops. So still below the 50-day, but it actually undercut. So maybe Apple is losing a little bit of steam as far as, and it makes sense. If you don't want to hide, I actually would like to see Apple do nothing, just go sideways. Because if you don't want to hide in Apple any longer, you'll take that money from there and move it to other areas. The Russell is actually held up much better than the other indexes. You can see, go to weekly, and it's not as much as I thought, but the relative strength, and my relative strength is versus the NASDAQ, but the relative strength has been trending a little bit, but you had an undercut much further back, and then you held that. So forced really good days there. Let's see here, what stocks? GTLB, just insane strength. Look at that weekly chart. Looks very similar, right, to the Chinese stocks, but that one was something that was on my radar. It was up 76%. It was a really hot IPO, priced at 77. Opened at 100, ran to 137. I was in it. I can't remember if I bought it here, but I was in it for, looks like half a minute in one of those moves. But it's really, great sponsorship, and here, although not quite in the IBD mutual fund index, but I do hear a little bit about that. You actually have some insider buys too in this company, so that's interesting action to me. I would like, again, I want it to quiet down. Ideally, it builds a base. This is just way too wide and loose to be a double bottom. So it just needs some quietness. But it's interesting that the market's willing to put on risk. There's another one that I've been in before, DLO, which doesn't look as good to me as GTLB, but had a huge week this week, up 42%. So if they're willing to put on a little bit of risk, that's a good sign. As far as, quote unquote, textbook buys, GFS broke out, Global Foundries, it's a semi. And, I probably think that was the pivot. I would, if I was watching this one, and unfortunately I wasn't, I would buy it right there, breaking above that high. But 1, 2, 3 just stacked a bunch of days on top. That looks very strong. I did buy ACLS, which is another semi Excelsius when it broke this trend line like that in the handle, and 60 to 80 in 4 days. 1, 2, 3, 4. So real strength, and just kept stacking on strength, which was good to see. It's been a long time since I've bought something and was up immediately. and then the next day was up, and then the next day was up, where I could add to it with some confidence as it started to move. And, this morning the market tried to open lower. I think it was down maybe $1, and that was it. It was down $1 for maybe 20 minutes tops, and then it started to rally again. So that's really good action. The weekly chart, it's not a great base, but that doesn't worry me so much. I'm more looking for, look at that strength, that weekly bar, and the earnings and sales are incredible. The return on equity is really good. The proprietary ratings are great. The group is poor because semis have gotten hit a little bit, but that's fine. They've been so strong for so long. They definitely deserve a pullback. If you pull up SMH, you can see that was just such a great group ETF for a long time, and it's finally pulled back. So GFS, ACLS, GitLab I talked about. And then somebody asked about the VIX, the VXX, and I don't know enough to comment on, what happened here. I will tell you, it's funny that they emailed me about it, because this day right here was March 15th. Okay, and let's go to March 15th. Was March 15th the follow through day? No, the day before, right? So I noticed, because VXX was on my screen, I was a proxy for the VIX, and I noticed what it was doing intraday. So it was spiking, making dramatic highs, but the market wasn't coming in. And I was really confused with the action. And I actually thought that was very bullish, that, the VIX is spiking, the fear is spiking, but the market's not going down. It actually got me bullish. My interpretation, I guess I kind of got lucky, because my interpretation of what was happening wasn't real. I think this was a short squeeze. I think somebody got caught short this, a lot like you heard about nickel. And these levered products are really tough. I'm not a fan of these things. I will trade them once in a while, but you really need to know what you're doing if you're going to buy like the triple QQQ. Look at the weekly change in this. It's down 24% or 23% this week. And so you have to understand. How about, FANG stocks down, from 80 to 44 in 1 week. You give back half your money in 1 week, from the high to the low. You have to really understand when you buy these things. So I'm not a financial advisor. I would say dig really deep into understanding why these products are flawed, for lack of a better word. That it's because they're constantly rolling over, they're constantly leveraging. And if you go back through history and study where people got in trouble, long-term capital management, or Bill Huang, the hedge fund manager, or AIG, when, during the great financial crisis, it always, always, always comes down to leverage. It really is the one way you can get yourself in total jeopardy, total trouble, is leverage. If you don't use leverage, you can ride something down a lot, but it's really very difficult to get killed, to get knocked out of the box, unless you use leverage. And you might not realize it, but you're using leverage when you buy these, so this is triple the NASDAQ to the downside every day. So if the NASDAQ goes up 1%, you're going to lose 3% that day. And so you have to know that that's there. And I will use these once in a while for my IRA, because you can't for my Roth and my SEP and my regular IRA. I've got like 6 of them, 3 for me, 3 for my wife. But I understand that it's a trading sardine. And if you know what that means, there's Linda Bradford Radke wrote a book. She was a market wizard, called Trading Sardines. And there's a story you really should look up. But basically, they were trading sardines, and it was just, they were buying and selling them, and going back and forth, buying and selling them. And one guy actually took the sardines home and ate them. And he came back to the guy that he bought them from and said, "These are terrible. They were spoiled." And the guy says, "Well, why did you open them?" And he says, "Because I was hungry. I wanted to eat them." And he says, "Oh, those aren't eating sardines. Those are trading sardines." So if hopefully you understand the message of that story. But the bottom line is these are trading sardines. Anything that's levered in the ETF world, or the UVXX, or any of those products, you have to understand that process. I will never hold these more than a day or two or three, because of the leverage and the way that they trade. So I don't know what happened to VXX. It's above my pay grade. I don't want to say I don't care, but it's not going to really impact me, because I don't really trade the UVXY or the VXX. I'm aware of those, but it's just not, they're just not good products. So I don't want to bother myself with them too much. Honestly, if I could short in my IRA, I wouldn't, these wouldn't even be on my screen. I would just short the QQQs if I wanted downside protection, or felt like I wanted to, speculate to the downside, or SPY, or the IWM. There's plenty of things that I could get. And there are, I think PSQ is like a single NASDAQ short ETF, so it's not as bad as the others. That's, I've been in that one before. Food for thought. So keep that in mind. Okay, let's go to, I got a meeting. Okay, the quote of the week. It's from the book Zen Mind, Beginner's Mind. I should have looked on how old that book is, but I believe it's really, really old. If your mind is empty, it is always ready for anything. It is open to everything. In the beginner's mind, there are many possibilities. In the expert's mind, there are few. One of my favorite quotes of all time. It's partly why I call my Twitter handle Zen in the Markets, because I love this quote. And it wasn't written for investing or trading. It's written as, about life in general, right? But one thing I found when I was young and starting out, I was a beginner, and there's an advantage to being a beginner. I really believe. A lot of people will email and say, "Well, I'm just a beginner," like there's something wrong with that. We're all beginners in everything we do. Nobody ever was not a beginner in anything they did. So there's no shame in being a beginner. I don't know why people, they preface that, like, "Oh, I'm just a beginner," kind of, and I don't know if shame is the right word, but you don't understand what I'm saying. But everything that I've gotten good at, and or meet even fairly good at, I was a beginner at. It was every sport I've ever tried, every activity I've ever tried, investing, everything. So there's nothing wrong with that. But when you're a beginner, you're very open. You're open to all the possibilities. When I began in the market, I had read Bill's book, and I just, followed the rules. I just, I was open that these rules worked. I was open to all the possibilities. And then as you get better and better, you start to bend the rules. You become an expert, right? And so you say, "Oh, well, this rule doesn't work, or this one doesn't work, or I'm tired of getting stopped out. I'm tired of getting shaken out, or breakouts don't work." I've heard them all a million times. And they're all true in some capacity, in some areas, in some time frames. All of that is true, but you should be open to many possibilities. And have an imagination, have a vision that anything can happen. And right here in this market, as we sit here today, I am open that it could be a bear market rally, and we run right into resistance to the 50-day and roll over and make new lows. I believe that can happen. And I'm also of the possibility that this market might go straight up and leave everybody in the dust, because we have had a nasty bear market already under the surface. That could happen too. So I'm open to either way. And, I'm sort of playing both ways. I have some longs, I have a single short, and I'll let the market tell me which way is right. As my longs start to work, like that ACLS, it really started to work really well. I really started to press on that one. If my short starts to work, I might do the same there or take off some of the longs that I've added to. So be open. Anything can happen. We don't know. I don't know. The Fed doesn't know. Nobody knows. Just go with the flow and, manage your risk. And I think you'll be fine in the long run. Okay. Thank you guys. Have a great week. Next week, I think we'll be good. So here's our contact information. Reach us at marksmith.com, 800-831-2525. Bye-bye, everybody.